Hello everyone, Amazon is the cheapest it's been in nearly 10 years, according to this main metric that I want to tell you about today. Amazon is an amazing company that has outperformed the S&P 500 in the past 5, 10 and of course 20 years. It ships products all over the world and has amazing diversity across its business, from its online marketplace sales and third-party seller services, all the way to its advertisement and the Prime streaming service, and we cannot forget about their online cloud service AWS, which grew its net sales 19% last quarter of 2024, and is of course the cloud leader in this space, accounting for around 34% of the cloud market share, ahead of Microsoft's Azure and Google Cloud. So you would think, with all those great things happening fairly recently with Amazon, that the stock would be soaring in valuation. However, that's just simply not the case. It may be true that the stock is still outperforming the market so far this year, up around 34% to the market's 24%. And it's still up close to 11% in just the last month, 6% of which has been in the last week or so. Now I want to dive into Amazon's historical metrics to understand why this mega cap stock is still looking quite cheap right now, and historically cheap over the past 10 years, according to the very important metrics that this company is often valued on by investors. So let's talk about the valuation of Amazon. But just quickly, full disclosure, I do own Amazon in my stocks and share portfolio that I hold on Trading 212. As we can see, of the £41,000 portfolio, we have around £10,000 worth in Amazon. Now, there is a substantial position, so that may mean I'm biased on this one. But please do your own research to this company and just get a feel for how I look at this company and maybe to interpret it for your own research. But I am seeing very promising things with the fundamentals that I want to share with you guys. So it's currently sitting at a price to earnings ratio at around 43, which is actually quite high for most companies, even a high quality one like Amazon. Even with the forward price to earnings ratio sitting at around 31, this is still quite highly priced. So viewing that in isolation, we wouldn't actually say this one is even cheap right now. We would say it's quite highly priced. Now, historically though, this metric has been bad to value Amazon. That's mainly because some years it has not had any price to earnings ratio whatsoever, because they haven't had any earnings. They've actually had negative free cash flow and of course negative net income. So generally, there's been some years that they've put more into research and development, and it's hard to get consistency with this company's price to earnings because the swings it has had in the past years. However, if we do look at it just from the last 8 or so years, we see that the majority of their profitability has come in that 8-year period. And we can get an average P historically much higher than it currently sits at, of about 111, which is obviously extremely highly valued. Now, we could argue that that was a long time ago and Amazon's revenue was actually growing a lot quicker than it is now. However, just on this metric of PE, it doesn't look too bad historically to how people have priced Amazon. That still signals a bit of undervaluation despite the high valuation of this metric overall for this company. But this isn't the metric I want to use today to show you why Amazon is the cheapest it's been in around 10 years or so. But it is a very popular one, so I did put it in. The metric I want to show you guys is their operational cash flow. Now, Amazon has grown its operational cash flow very well in the past, at around a CAGR of 22% in the past 3 years, and 25% over the past 5 years, to a record $108 billion over the trailing 12 months. This is of course the metric that measures the amount of cash a company's normal business operations produce without the takeaway of capital expenditure. This growth of operational cash flow is not unusual for Amazon and has actually been higher in the past. But to me, it's probably the best metric to understand Amazon's business, its valuations it's offering right now, and its ultimate valuation. Because this is an incredibly complicated company to run and finance with high capital expenditure. The shipping of products, the running of its day-to-day operations has always been high in capital expenditure. But if we look at the operational cash flow metric over the past 10 years, we notice a bit of a trend. The operational cash flow seems to closely match the overall market cap and stock price of this business. Now, we are using operational cash flow yield of Amazon over the past 10 years compared to its market cap of the company. Now, it doesn't happen all the time, especially here in 2017 to 2018, where the share price goes up, but the operational cash flow yield goes down. But we can see the share price kind of stalls out in 2020 to 2022. That's probably related to the COVID tech bubble. However, the fundamentals of operational cash flow for this company went down, and so did the share price. Then, in the beginning of 2023, we see operational cash flow skyrockets, and of course, the market cap and share price quickly follows on. Now, there is lots of things going on with this company, so it's just a theory, but I see a lot of links between the share price and overall valuation of Amazon with this metric in particular. Now, if we take that further and go on to the bit that you probably guys have been waiting for, we talk about why it's been the cheapest it's been in years. That is because when we look at the price to operating cash flow, it sits at around 17.9 times. So the share price for Amazon is getting outpaced by operational cash flow this company is producing. It's the lowest it's been in 10 years, not hitting at this point since back in 2013, so around 11 years ago before 2024. With an average in the past 10 years sitting closer to that 27 times price to operational cash flow. So as we have said previously, the operational cash flow seems to be closely linked to the share price. When the operational cash flow goes up, the share price shortly follows along, especially in more recent times. Now, it's just my theory, and obviously there are lots of things going on with Amazon's profitability and margin expansion at the moment too, which could be the reason for this increase in share price. But to me, the operational cash flow is the most closely linked to the fundamentals of Amazon, and at the moment, it's the lowest valuation it's sat at in years. But on top of that, Amazon has fantastic cash flow growth. In more recent times, growing their operational cash flow by around 75% to 108 billion compared to 2023, and growing their cash flow to 53 billion from the second quarter of 2023, where it sat at 7.9 billion. So I'm seeing Amazon still look quite attractive now, despite the recent run-up. If we look to see what is being priced in with this stock on an operational cash flow analysis, we can see that it currently trades by a price to operating cash flow of 17.9, a lot lower than it normally is. So we'll put that in. We get a return around the market average, around 9 to 10%. So if that's the case, then the market is pricing in around about 11% growth in operational cash flow in the next 5 years, which is actually a metric they grew by 75% over the past year, quarter over quarter. Now, I'm not saying that's going to happen again. It may do, but I think we are more likely to see a slowdown in this growth and margin expansion. However, I do think the market is not really pricing in Amazon that high when we consider the growth rate of this particular metric. So if I put in a more appropriate growth rate percentage, say 15%, which is quite high over a period of 5 years, but I think it's perfectly possible, and add in a more accurate price to operating cash flow of around 20, we get a fair value sitting around $241 and a CAGR of around 16% over the next 5 years or so. Even if we say this company grows its operational cash flow by just around 10% and the price to operating cash flow stays the same at 20, we still get an outperformance of the market sitting around 11% roughly. So in summary, I think this one is still quite cheap right now, according to the fundamentals and especially the operational cash flow Amazon is producing. And that is one of the reasons I have such a big stake in this company in my portfolio in particular, because I believe in Amazon and believe it will grow very well in the future. But what do you guys think? Let me know down below. And as always, thanks for watching. I do appreciate it. And I'll catch you in the next one.